If you track digital assets, you are seeing the BlockchainFX presale everywhere. The headline making the rounds is that they've hit a massive $15 million hard cap, with speculative capital pouring in fast. The team has locked in a public rollout for August 10th. Their marketing is framing this pre-launch window as the absolute last chance to secure a position before open market trading begins. To drive immediate action, they've introduced a promotional tool called the Launch 80 code. Apply it at checkout, and you get an 80% bump in your token allocation before the public listing. That setup forces a quick decision. You have to weigh whether this is a genuine ground floor entry into a valuable new ecosystem or a high-risk trap designed to capture your liquid capital. Ticking clocks and massive bonus codes are deliberate marketing mechanics. They engineer an emotional response, specifically the fear of missing out, which tells you nothing about the actual value of the underlying asset. Look at this side-by-side comparison. On the left are the flashy headlines you read in crypto publications, but when you read the fine print on the right, you find disclaimers explicitly labeling these articles as sponsored content from an external source. In the crypto space, this is an advertorial. Projects pay media outlets to publish their press releases, so they look exactly like organic, independent news stories. This strategy creates the illusion of widespread institutional momentum. It makes a private presale look like it has undeniable community demand. An independent journalistic audit investigates a project's code, team, and financials to protect readers. A paid marketing campaign does the exact opposite. It relies entirely on self-reported claims to sell you something. The initial stakes here are high. You're trading real capital for an asset that is currently sustained entirely by a paid advertising budget. At the 4-cent presale price, you get 100,000 tokens. Applying the Launch 80 code stacks an extra 80,000 bonus tokens on top. With a confirmed launch price of 5 cents, your portfolio shows an artificial spike in value before a single public trade is made. But generating bonus tokens out of thin air destroys scarcity. This is token dilution. With everyone holding inflated token amounts, the universal incentive is to sell immediately on August 10th. As simultaneous sell orders hit the market, that high dollar value crashes. This creates the threat of becoming exit liquidity. Later buyers step in to purchase the token at launch, only to be left holding devalued assets while the early bonus claimers cash out. The mathematical allure of an 80% bonus is a mirage. It looks incredible on a spreadsheet, but evaporates the second open market supply and demand take over. This quadrant chart plots risk against verification. Look where BlockchainFX's headline achievement, the self-reported $15 million funding claim, lands. It sits far into extreme risk territory. Capital raised and locked on a public blockchain can be verified by anyone. Internal numbers displayed on a private presale dashboard cannot. Relying on those private numbers gives you a false sense of security. You assume thousands of other people have already put their money on the line and vetted the project for you. If those internal metrics are exaggerated to drive FOMO, you are flying blind. You have zero proof of the actual liquidity available to support the token's price at launch. Trusting unverified off-chain numbers from a sponsored source violates the core security principles of decentralized finance. BlockchainFX's stated utility is bridging traditional stock and forex markets with decentralized Web3 technology. That concept targets a genuine, highly lucrative gap in how modern traders operate. Connecting those two financial worlds would solve real liquidity problems. But look at the reality of their pre-launch phase. Right now, the team has proven they can execute a highly effective marketing campaign. They have not yet proven they can build and secure a complex financial bridge. Investing at this stage means tying up your liquid funds in a pre-execution idea rather than a functioning live product. Backing a good idea does not guarantee a good investment. The transition from private funding to public execution is the highest risk phase for any crypto project. This scorecard lays out a strict pre-sale litmus test. To participate, you must accept a 100% total loss, understand dilution mechanics, and have an automated exit strategy. Stripping away the hype, this asset is built for one specific profile, the highly experienced, high-risk crypto speculator. That speculator does not view the BFX token as a long-term utility play. They view it strictly as a short-term volatility event. They will have a ruthless, automated exit strategy ready the minute the August 10th launch occurs. To that specific investor, the Forex bridge technology doesn't matter. They are only trading the momentum of the 80% bonus code. Engaging with heavily marketed presales requires treating the asset like a high-stakes lottery ticket. You have to remove all emotional attachment to the project's long-term promises. If you are an everyday investor or a crypto beginner feeling the anxiety of the last chance messaging, step back. Completely ignore the August 10th countdown. Keep your capital firmly on the sidelines. If BlockchainFX's Forex bridge technology actually works, the token will hold its value. It will present safe, clear entry points well after the initial launch volatility subsides. True wealth in digital assets is built by identifying proven market utility. It is never built by succumbing to ticking clocks and sponsored bonus codes.